Hello, Maverick traders. Welcome out to your FX and crypto midweek update for June 7th. Nice to be here with all of you. And let's get into it. So, this week we've had a couple of surprises, a couple of central banks that raised rates, and that was not anticipated. In both cases, they were expected to leave rates unchanged. Although I do have to say that the market was certainly expecting that if there was a surprise, it would be on the rate hiking side of things. So it was kind of are they going to raise? Are they not? It wasn't clear in terms of the picture, and they went ahead and raised rates, telling you central banks are still very much concerned about inflation. We're expecting, well, let me speak for myself. I'm personally expecting that we've reached an exhaustion high in the NASDAQ. We're close to it in the S&P and in these other markets as well. So it was kind of a situation where the NASDAQ went up first and sort of formed its exhaustion high. The S&P lagged, and it's starting to do just that. And these exhaustion highs are like a big exclamation point. They're like a big emphasis at the end of these runs, and that should certainly correspond with some rotation in other assets around the world. So when risk off starts to materialize, now it won't happen quickly. It'll be kind of the market drifts lower and chops around and goes down. I'm not expecting a big crash or anything, but you should see the equity markets top out and turn down, and things that have been going down, specifically Japanese yen and other things that are more defensive in that way, can start to rally. Now, I mentioned last week that I'm putting Bitcoin in more of the risk category, in that I think it will trade down and does not look good. Now, I got that right, but not because I could predict that the SEC was going to come after Binance and some of the other news that came out this week that has really hit Bitcoin and crypto in general. It wasn't a call for SEC enforcements and litigation and all of that. It was just purely off of the charts and off of the idea that it's still just a risk asset. And I think part of what allowed crypto to flourish was the mass amounts of money printing. That was A, the argument for owning crypto, and B, just massive amount of money printing. People wanted to figure out places that they could put that capital, and Bitcoin and other crypto assets offered potential upside, enormous upside in terms of the volatility. So whether you were an ardent believer that crypto's the next big thing, or just one of those that said, I've got capital and I want to try in my hand a small percentage in the crypto markets or what have you, there was a lot of that happening. And so it became a market that way. I'm not so sure, again, that most of those coins are going to last. I would be shocked if they do. Remember, there are tens of thousands of coins that have been created, all sorts of things that are they're destined for bankruptcy. The ones that are kind of the core of crypto are going to trade more based on risk. And the fact that we don't have as much money printing and all those things, that tends to hurt the crypto market. So we'll look at some of those charts here in a bit. Overall, I would expect, again, a little bit more risk off in the coming months. Not so much tomorrow or anything like that, but in the coming months, I expect a pretty good sized downdraft. On the economic side, we really don't have anything this week in terms of economic reports. We had a couple of central banks out of Australia and Canada, and like I said, they raised by 25, but this is a little bit of a stretch. Again, GDP figures out of Australia are not a major market mover, but a little disappointment there as growth continues to slow. Now, as we look at price action and performance, again, it's very quiet week. The S&P and international markets just flat. Crypto outsized move on the downside, and again, a lot of that related to this SEC crackdown. Gold slightly lower, oil slightly higher, but pretty boring week thus far. If we flip over and look at currencies, Again, a pretty boring week. There's two currencies that are up and both had surprise interest rate hikes. That would pretty much make sense in terms of, well, they surprised the markets a bit and everything else is just flat and not moving. So if you played the Aussie or played the CAD to the upside on that announcement, you could have made a few pips, but again, there's not a lot of volatility, not a lot of overall movement. Crypto in general, again, moving lower, down a few percent, and we've talked about that. It's just in this persistent downtrend for now. So let's come over and think about the equity markets. Are they bullish? Well, we are above the moving averages, certainly. So bullish, but dangerously bullish in that you probably have a situation where, again, I think this is the run that you want to fade. You want to start to say, okay, is this going to be sustainable? And I look at it as though here's the start of the race, and this is the middle of the race where you're just grinding higher, and then you usually sprint for the finish line. If we were to look at the NASDAQ, it's more pronounced. So if we move into this risk-off environment, again, the crypto markets, which have been in this big trading range, ultimately probably trade out of this range to the downside. Now, right now, it's weaker than not. It's in a sideways consolidation really over the past month and a half, but we're still below those moving averages. The moving averages are sideways. There's not a clear direction. I tend to think we're going to break to the downside out of this asset class. So be it Bitcoin or Ethereum or whatever, I suspect that that's the direction, the path of least resistance. So again, there's not much on the docket in terms of news. We have Australia with a little bit of a surprise. We have the Bank of Canada with a little bit of a surprise rate hike. Disappointing data out of Australia, disappointing data out of the US. The services PMI came in at 50.3 versus 52.6. And remember, if you drop below 50, now you're actually in recessionary area. You're actually negative growth at that point in time. There's not much out there in China. We get some CPI data. The news last night out of China was a bigger than expected slowdown in their economic activity as well. And then in Canada, you get some employment numbers coming out on Friday. So I think this is a week where, other than the central bank meetings, you can kind of ignore all these other factors a little bit. That's not what's moving the markets. What's going to move the markets is more based off the technicals, and just any surprise announcement would certainly do the trick. So if there was some, surprise out of a central bank or something along those lines, that could do it. But I'm not so sure that's expected or anything that really, I don't expect that to happen. In other words, that's not something we're planning for. So if we come over and pull up a few charts, I'm going to start with the crypto markets. So we looked at this. This is all crypto, right? And if we come in to some of these, maybe Bitcoin by itself, you can see a little bit more of a lower lows, lower highs dynamic in place where you're just stair-stepping your way to the downside. You can't really feel good about Bitcoin from this chart unless you break above the downtrend line. So cast your downtrend line right here. And if we can, and this is still a big if, but if we could break out above that, that would be a good bullish signal in terms of, hey, we've cleared that resistance. Now we can get back to buying the dips, because you're likely to stair step the other way with, you don't have to chase the upside breakout, right? You'll get pullbacks and that's an opportunity. And then you go to new highs and you get pullbacks and that's an opportunity. So we've got to get above that downtrend line. Now, as long as you're below that downtrend line, I think you have to maintain a more bearish outlook, at least neutral. There's not a really compelling reason to be an aggressive buyer here. We could even argue that perhaps this is in a little bit more of a channeling pattern. So notice if I were to something like this might, and I'll just tilt it a little bit. Something like this might be the channel that you're in, where essentially you're kind of channeling back and forth here in this range. And so that channel could persist quite a bit longer. And right now that seems to be essentially the direction we're in. Bitcoin Cash worse than Bitcoin itself, back towards these lows, descending triangle, not great price action. Ethereum, same type of dynamic, maybe a little bit more sideways, but you still have, I mean, I would call this more of maybe a descending triangle as well, but again, you still got to get above that downtrend line, and as long as you're below that, hard to be bullish. So you can see the descending triangle. Are we going to break to the downside? I worry that that's still the path of least resistance here. Litecoin, maybe better than the rest, but again, not so much super bullish, just maybe a little bit more neutral. Still nothing that looks all that compelling towards buying right here, right now. Now, if we flip over to currencies and look at their big picture chart, here's the US dollar chart. And what did we say about the USD? Well, we said what you might be doing is finishing the cup, which we did. And then we said, watch for the handle, and you want to be a buyer in the handle. And we're, by the way, in the handle zone. So if you look at this 123.50 to 118.50 is the size of the cup. If we take the distance, the size of the cup, it's basically 0.0500, right? Now we can do this if we look at it from, well, let's just do it on the calculator so we make sure you follow. We're just taking the resistance point, 123.50, subtracting the bottom of the cup here, which is around 118.50. You can see it right there. So that's the size of the cup. Why is that important? Again, that's 0.0500. This should be about 30% of the size of this, right? So cup and handle. And oh, by the way, the technician that developed the cup and handle pattern, it's a cup and handle is nothing more than just a price pattern so you can recognize it. Sometimes pictures allow your mind to work where you can see, I call it painting a picture, you can see the picture so you can see the outcome, what's likely to occur from here. It's sort of artistic in that way, right? What's an ascending triangle? What's a descending triangle? They're just price patterns that allow your mind to visually spot something that's materializing and then visually see what the resolution is likely to be. So now we're going to multiply that by 0.3 because we need to figure out what 30% is, and it's 0.0150. That's how big the handle should be. So if we know resistance is here, we simply subtract 0.0150 from that, and that tells us where we should bottom out. So if we take resistance at 1.2350 and we subtract the size of the handle, 30% of that is that. So that's how far it should step back. It gets us to 122. 122 is right here. So are we a little bit below that? Well, still in the realm of 30%, right? If we draw that a little thicker, does it matter that you went to 121.50? It is a little bit deeper than is ideal. You can see that it's actually touched that 3 separate occasions there. But notice today's reversal, bullish engulfing. I think USD is in fact going up to that high point again. I would say that I don't love when it goes, 35% instead of 30. It would be picture perfect if it just stopped right on top of 122. But we always say this is a zone. This is an area. It's not like it's supposed to be an exact science. We're not taking, if you wanted to make it really super scientific, you'd have to take the absolute top here, which might be 123.60, and the perfect low here, and do the math accordingly. And so maybe it's a little bit deeper, but even if this is 35% the size of this, you can see it still has that general price pattern and is still right within that realm. It really hasn't broken down where it's given up this 20 period moving average or anything of that sort that tells us, hey, all bets are off. And it's also very good from the standpoint of, exactly where this thing's not working. If we get back down here and break this level, well, all bets are off at that point. So if we're down here, big red candle or something that starts to break down here, then it is not a cup and handle pattern. At that point, I throw in the towel and say it wasn't meant to be. I don't think that's the case. I think we are still going right back up there. Now it might, chop around, but do I think we're going back to 123.50? Yes. And Mo, by the way, if you get back up there the third time, you're probably breaking through, and the size of this handle can be flipped upside down up here to give you an upside projection. So 125 would be the big upside target on this dollar basket. Why? Because that would be 150 above this. In other words, if 150 below is here, 150 above is your upside target, which would put us at 125. So I think there's quite a bit of upside from that standpoint. Japanese yen has been a bit of a disappointment. I would have expected some hold here, we even talked about it last week that maybe it would pull back and give you a little higher low and a dip to buy here. It didn't do that. Instead, it sliced right through. And here's the good news, I guess. The good news is it was so bad, it never really gave you a setup. And sometimes that will save your bacon. Was I looking at yen as a buying candidate? Yeah. In fact, we even looked at it on Monday in the RBA. We looked at this general area, that's that type of idea, and it just didn't set up, right? Went the wrong way. Well, if this had pulled back quietly and kind of stalled here and started to turn up, I would have bought the yen. I would have shorted some other currencies against the yen. Just wasn't meant to be. So is our thesis broken, or are we just still in this little bit of an exhaustive area in the markets? Probably the latter. So if we're going to finish with a bang on the upside in equities, we might finish this thing with a bang to the downside in the yen. If you see, watch for something like this. Watch for some big hammer-like candle. Watch for a period where maybe the sell-off intensifies and then you see a big reversal that forms. If I get a big signal like that, even though it's aggressive and I don't like buying massive downtrends, I might take a stab at that one. But it's a no touch right here, right now. Just, I mean, it's not, there's no setup there. There's no trading opportunity because there's no signal, no setup and opportunity from that standpoint. Euro has been trending a bit lower, as you can see. Maybe has started to break down below that level. So perhaps short euro would still be the idea there. Swiss franc, if I was going to buy one of those European currencies, it would certainly be more in the Swiss franc camp. I could make an argument that we're back towards the low end of the range. See how many times you've bounced there. And here's obviously the upper end of the range. So watch this level. It will make or break. Either it holds again or it doesn't hold, which would be a really bad signal for the Swiss franc. British pound still in an uptrend, still pretty much kind of grinding its way to the upside, still pretty healthy and pretty strong. CAD we had talked about back here, and one of the better opportunities was to buy CAD right there. I filled in for Onkit doing a FX roundup on, it was on a Monday, and it was a couple of weeks ago, and that was right there, that setup. Now, I didn't suspect it would go this high. We had talked about you could take this size of this and project it up here, but that only puts us to here. This thing has exceeded all expectations of bullishness, but I really liked the CAD. I thought that it had potential. Aussie has turned. Aussie, I would not be chasing momentum because you got a lot of overhead supply, but you'd really have to give credit and say, okay, well, it has now broken out of its downward phase. That's clear. But is that just, again, more of like a trading range? Is it going to come back here and so forth? I'd much rather buy the dip if you are inclined to buy Aussie anyway. But give credit where credit's due. It's been stronger here of late. Kiwi cannot get out of its own way. Still downward trending. And if you were going to short something, the Kiwi has to be pretty high up on the list. We had a bullish phase here where it retested the trend line. And then we returned right back below that trend line. Even a little inverse cup and handle type of dynamic still looks pretty darn weak. So if you're scoring at home, if you wanted to buy something in the risk area, you probably buy CAD. If you want to short something, it's probably Kiwi. If you're looking at strong trends, pound is still bullish, euro still more bearish, and Japanese yen is still bearish. Watch for a big exhaustion grand finale finish. I could see the yen going down sharply for a day or two, but then reversing hard off of that. And USD is probably something that I want to buy right here, right now, in terms of the cup and handle type of feel. So that's going to be my focus today, is US dollar pairs. So let's go find what we would be most interested in buying. Well, here's dollar yen. That's a possibility. Again, yen is still weak. I just have a hard time being short the yen. I feel like it's a ticking time bomb, so that's not my favorite. Here's dollar against Swiss franc. We know Swiss franc was at the bottom of its range, so probably not my favorite choice. Here's dollar CAD. We know CAD was really strong. So again, not my favorite choice. Now, we get into Euro USD. This one's probably a little more compelling just in terms of Euro's been trending lower, dollar still looks healthy. You can see some potential targeted areas where this seems to be working its way towards. Really looks like more of an inverse cup, right? And this screams as though it's where we're headed. How quickly we get there, that's a question, right? You could bounce a little first or something, but it certainly looks like we're headed towards that zone. We know pound has been strong, so not my favorite choice. Again, Aussie, recent strength, but we feel like Aussie might just be at the top of its range, so that one could be a possibility. And then we get to the most obvious choice, which is just Kiwi USD. This one is working on all accounts. You broke support, you failed at resistance. If you had a position right now, I suspect it would be Kiwi USD on the downside. So probably not too late, frankly. Look at this as a potential candidate. Stop losses up above here, targeting moves to new lows where you're going to take profits and so forth. But certainly looks like something that I could get behind in terms of being short. If for those scoring at home, just based on the charts and just based on kind of my outlook, I would say Kiwi USD. If you want one that's a little bit more sneaky, again, you could be short Euro USD. Pound has been stronger. It did kind of have a big exhaustion top a couple of weeks ago, and it's still below that. So maybe not as obvious, and it has been really strong, but I'd probably put it third on the list. Maybe that or Aussie. I mean, those would be a couple of candidates. But for me, you're basically short something against the USD if you like that cup and handle and feel like there's going to be some upside over the next coming days and such. And I suspect that most of those should work. I really would expect that US dollar, when we come back and look at it in a week or so, I anticipate that the dollar is going to have gone higher versus virtually every other currency. So if we come back to our dollar basket, I think this is on its way here. How does it get there? Well, it's going to get there because it's stronger than this and this and this and this and so forth. Now we are trying to find the weakest currency and pair it up with the best possible candidate. But that's my personal outlook. That would be what makes sense to me. Kiwi CAD we had a request for, so let's take a look at it. Here's NZD CAD. Let's take a look. Strong downward trend. Broke support well. I mean, just has continued to really fire to the downside. You could be getting a little long in the tooth if you measure the size of this and then take it and put it on the other side. Maybe, that would be a what we call a measured move. That would be the only concern. The only concern I would have about this at all is that maybe you're getting into exhaustive territory where profit taking starts to make sense. Especially, remember, here's a good technical guide. Let's draw them in the right color. If I show you this candlestick, is it bullish, bearish, or neutral? So I'm going to say it's large in size. It's expanded range, meaning it's bigger than normal. Normal trading is smaller than this, right? And here's this big green candle. Is that bullish, bearish, or neutral? And it's a little bit of a trick question because it all depends. It depends on where it happened, right? If I were to show you a big red ugly candle and I say, is that bullish, bearish, or neutral? It's bigger than normal. It's expanded range, right? Is it bullish? Is it bearish? What does it suggest? Well, again, it depends. It all depends on where it happens, what the context is around it, and so forth. And then we can make that determination because this might be very bullish and this might be very bearish. It's counterintuitive, I know, but that's how markets often work, is that at the extremes, these are your big exclamation point, that punctuation mark. So if we were to look at some of the red candles, we say, well, this candle is large, so is this candle, so is this candle, so is this one. Here's a big one. Down here's a big one. This is a big one, and so forth. And what do they pinpoint? What do they suggest? Well, if we put context around it, now it starts to make sense. Where we say, okay, there are a couple of phases that things can go through, right? Things can be in a consolidation where you're really not going anywhere. And in that environment, if there was a big red candle right here in the middle, does it really do anything? Does it really signal anything? It's just, I mean, yeah, it's a big selling day, but you're still stuck in the middle of the range, and these moving averages are going like this or whatever. and there's just nothing to it. There's nothing that I can really sink my teeth into and trust within this. But then I say, well, what if it happened that another big red candle were to form maybe right here? Okay, now in context, now I've got something. Because I can look at this chart and say we've broken the lower end of the range, the support. This should be the stage 2 breakout. Big size candle is confirmation of that. Okay, this is great. This is fantastic. This leads to more downside. But then if I draw these normal sized candles, right, all of these, and the price action is going nicely lower, and it's grinding, and there's maybe a consolidation in here for a little time, and then it grinds some more, and so on and so forth. And then all of a sudden you get this big, huge bearish candle here. And we look at the context of this chart and we say, well, wait a second. Here, there was a good sized red candle, but it happened in the consolidate. Well, who knows what's going to happen? I see that happen all the time, and this thing breaks out higher a few days later. So can't trust that one. This one I know was the breakdown point. This was when the race started. That's the stage 2 breakout, right? This is stage 1, just consolidating and indecisive. We continued on that downward trend for weeks, for a long, long period of time. And that whole area, that whole trend is called stage 3. It's just continuation of trend. An object in motion tends to stay in motion, right? And then after such an extreme move and all these, these moving averages are way up here, the price is overextended and so forth. And now you get this massive bearish candle. Is that a bearish signal? Is this something that you want to jump into and short aggressively because it gave you a big bearish candle? No, at that point, you say, well, what just happened? Probably some bad news or whatever. Really, it's the culmination of what was happening here. The markets were probably pricing in that bad news that was coming, right? The markets have a tendency to know, okay, there's this, and this, which will be bad for the currency going forward. And so they're selling, they're selling, they're selling, they're selling. And then the news comes out that was being priced in back here, and the smart ones take their profits and they go, that's it. That's the end of the move. I'm going to lock in my profits on the short. And who sells right there? Who shorts? And just, people that are chasing momentum, but more to the point, the people that are buying are probably buying back their shorts and got squeezed out. And it's what we call a capitulation. It's just if you were long, you've thrown in the towel. The bearish news, the big candle, it forced you to sell, to give up on your bullish thesis. Should you have sold way back here? Absolutely. But the unsophisticated, they sell at the extreme. They hold out and hope and hope and hope and hope and hope, and then they give up, right? And they say, too much pain, can't take it anymore, or they get force liquidated and they're short because they're margin called or whatever, right? But it's that big turning point. So in context, this is actually bullish. It signals that you're finally flushing out the final sellers. Anyone that's willing to sell is basically throwing in the towel. And once you've wiped out the final sellers, there's no one left to sell. Everyone that's willing to sell now sold and gave up. And if there's a lack of sellers, well, the price will go back up. Even if there's not aggressive buying, just a small amount of buying and no sellers, you're going to get prices going back up. So I hope that makes sense. That's what I would worry about here. Is it looks like you're reaching one of those more extremes where this might be, maybe it's due to the CAD news that's really fueling this excess. but anyone that has been long Kiwi CAD for weeks or whatever is probably throwing in the towel. And there are big institutions that are being liquidated from their short positions today and so forth. And it just happens. It happens over and over again. So, all right. So for the rest of this week, we've got our recap coming out tomorrow, of course. We've got our trading room over the weekend. And same slate pretty much over the next couple of weeks where we're moving into some events. We've got a CPI number in the US coming out next week that should show a huge drop in CPI. And I have openly voiced the idea that maybe on that quote unquote good news, when CPI takes that huge drop, everyone's going to say, hey, the job is done, the Fed has solved the problem, inflation's coming down dramatically. And remember, why is CPI going to take a big drop? Because we're getting rid of a huge June number from last year, and we're going to input a much smaller CPI. So expect to see, may not be a full 1% drop in the annual inflation, but it'll probably be pretty close to that. It's going to be a huge drop. And even though markets should be sophisticated enough to know, the television just sells stories. And so the television, CNBC, Bloomberg, they're going to come on and they're going to make a big deal out of it. They're going to have people on television that are talking about inflation worries or a thing of the past and so on and so forth. That could easily correspond. That quote unquote good news could be kind of the top in equities and where we start to see this turn. So it'll be interesting to see if those things correlate. Thanks again, everyone. Have a great rest of your week, and we will see you next time. Goodbye, everyone.